Welcome everyone to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, July 2nd, and I'm Michael Boutros. Good to be with you guys today for the non-farm payroll print, which is out in just under 15 minutes. And we'll cover that live and take a look at some of the intraday price action on the back of that release. So ahead of the release, guys, we're looking for a print of 233,000. Slight build on the expectation here. Yesterday was at 233. ADP came out pretty strong, so we're looking at 233,000 for today's read. Unemployment widely expected to downtick to 5.4% from 5.5. Obviously, we'll be taking a look at the participation rate in combination with that to see if there's any impact. Again, if the participation rate ticks up to 63, wouldn't be too surprised to see unemployment hold at 5.5%. We talked about that dynamic yesterday here in the webinar. So we'll take a quick look at the relative performance for the greenback. You can see that the dollar is actually strong against most of its major counterparts, save the euro, which has a slight gain of 0.16% ahead of the release. New Zealand dollar, really bad day, down 1%. It's not so much the size of the decline as the levels that it broke on the way down. So things could get pretty ugly here for the Kiwi on a continued dollar rally. So let's take a look at some of the dollar majors, and I do want to leave room and time for any of your questions, guys. If you have anything that you want to go over, any setups you're currently looking at, feel free to throw them on the message board. Looking at the dollar index ahead of the release, major key resistance. Look, we talked about the 11,880, 11,887 level. Once that gave out yesterday, the bearish bias was invalidated for the near term. Okay, we continue to push higher. The median line parallel almost caught the highs. If we bring this into a close, it looks like we closed right there. And here's the extended push here taking you through into this nice Fibonacci confluence. You're basically looking at a 618 off the high and a 618 extension off of the low. Gives you a region of 924 into 935, okay? Also a basic trendline resistance just off the highs that you made in June also coincide in this region. So what the expectations are for the release. Let's go over the possibilities here real quick. So on the back of the print and on the back of what we've heard from the Fed, we know that currently the inflation gauge is really the laggard of the dual mandate for the Fed, which is fostering maximum employment and price stability or inflation. So with the employment gauge certainly looking as if it's on a proper footing, we know that the Fed is really more focused on the inflation numbers. So we'll be looking for the average hourly earnings. We'll see if that's increased or not. That's expected to see a slight drawdown on the month-on-month, a hold at 2.3 on the year-on-year. And unless we get a major deviation from the expectation of 233,000, we might not actually get a play here today. Remember, you still have Greece looming this weekend with the referendum. Certainly that's going to have larger implications for broader risk sentiment moving deeper into July trade. And then we also have, a shortened holiday week, really thin liquidity conditions. New York today is practically empty downtown. Everyone's taking off early for the break. So liquidity might be an issue. That being said, Permendra, good morning. Great to see you. Leon, Raj, Tuttle, Eileen, always a pleasure. So with that in mind, what we could be looking to see, Eileen says, thanks for starting early to cover NFPs. Of course, Eileen, my pleasure. Possibilities. Look, at this point, I've spoken with Jamie about this. We were talking about this all night. I'm kind of more on the reserved area, let's call it, specifically from the scalp side. We're very, very light in the beginning of the week, specifically at the beginning of the quarter as well, really impacting those flows. We'll tend to sit back a little bit. From the swing standpoint, he's of the same mindset to start off NFPs here, just because the dollar is making some radical moves. And again, if we see it break above this, there's really nothing on tap until 12,000. So the possibility for a blow off on the dollar, if this thing blows through on a weaker read, that would be an opportunity to fade. We'd be looking to take dollar short exposure. If this print is exceptionally strong, topping 250 or so or more, you'll see if that breakout finally gets that run into 12,000. Looking at the dollar index on the near term, looks like this. Okay, here's the 30-minute that we've been following for the last couple of weeks. So I added on this median line structure yesterday. It looks like it's capping the highs pretty nicely here, and a 618, like I said, off the lows does bring that 935 level as near-term resistance, and this is really the region of focus we'll be looking on. A blow-off type trade, if the dollar sort of blows off and you get a major rally on a weak read, you look for 960, look for 969 as an area of possible resistance. If the dollar breaks down initially on a strong read, that would be constructive, and you'd be looking to fade that move as well. So it really depends on what the market reaction is. Guys, I would stay super nimble here. It's not really worth it on this specific print, in my personal opinion, to get aggressive on the trade. From where we are in a time standpoint, as far as where we are with the fragility of the market right now, right? Everyone's still listening for Greece headlines. There's a referendum on Sunday. No one really knows how this is going to play out. So just keep in mind, there's not going to be a very heavy there's going to be a reluctancy, rather, let's say, for traders to take on large exposure, really take a more concrete position on a trade ahead of the release. Okay, so just a quick word of caution there. We've got about 9 minutes left to go. Raj says, damn, looks like we will be stopped out of the dollar yen for break even on the swing side. Not necessarily, Raj. Again, I mean, look, as far as the dollar yen is concerned, here's what I'm looking at in the daily. We're at resistance right now. Okay, I know that Jamie has his stop, if I'm not mistaken, somewhere around 24, which is where I really like a stop as well. Here's what the dollar yen looks like on the intraday. Oh, there it is. Okay, and you have the upper median line parallel off the highs, which is being tested right now. There's that 2380 level, and there's 124. So you have the 50% retracement of the decline off the highs. That's 2388. And then 123.78 is those stretch lows that we made for the June opening range, and that's inevitably what put us on the bearish side of the trade. So I wouldn't necessarily count that out yet. You're likely to get some volatility, so you could get a spike into that high. But Raj, we got to keep things in perspective, right? We take every trade on the risk to reward. If it's going to get stopped out, it gets stopped out. No problem. There's always going to be more opportunities in the market. So don't want you to get too heavy on yourself there. So this is kind of where I was looking for this thing to hold yesterday. We're kind of probing through it now, but ahead of the NFP release, we'll be very mindful of that. So on the release, what I like to do, just a quick sort of housekeeping here, is we'll bring up these 5-minute charts. We'll take a look at what's seeing the biggest reaction. Then we'll jump into the 30 and find those levels and see if there's anything to play off of. Initially on these releases, guys, the initial reaction is typically not what I'm looking to play. A lot of times the initial reaction that the market moves in is actually not the follow-through direction that'll go on the back of the print. So we'll have to see what that release gives us. Okay, 9:30, get some CAD data as well. So looking at the dollar CAD, which is another trade that is very interesting for me, is that's coming to near-term resistance as well. And coming to this print, we want to see how that looks. So look at the 786 retracement off the highs. That's bringing you into essentially 126.40. Just above that, you have the median line off the lows, which could be in play as well. An extended approach takes you to 27.70. And that lines up pretty well with those stretch highs that you made back in March and the 100% extension off of the lows. Near-term support, you're looking at 125.60, because remember we talked about that yesterday, the low day close for the year. We pushed through it and closed above it yesterday, which kept the upside focus in play. And again, near-term support, yesterday's low, former upper median line parallel, bullish invalidation. So this is the level that you need to clear to look back on the short side of the dollar CAD. Now that's just an objective standpoint. On a weaker print for the dollar, again, if we do see NFPs miss, a spike into this region would be a nice fade opportunity, I think. Could be a play. On an extended break, guys, if the dollar comes out strong on the read, okay, and you see the dollar push through resistance, there's not going to be much play, or there's not going to be a setup for us to take. The market might rally, but from a risk-to-reward standpoint, remember, guys, every trade, whether it's intraday scalping, whether it's on the data release, whether it's in reaction to some sort of development, every scalp needs to have a proper risk-to-reward. So if we don't have any plays or we don't get any moves that are clearly concrete on the downside, it's hard to justify taking longs at the highs of the week, at the highs of the month, and so forth. So we might not have a setup here today, but again, we'll have to see how that data comes out in just under 5 minutes here. As always, feel free to throw out any questions or trade setups that you're looking at, going through the dollar pairs, the other stuff that we've been looking at aside from dollar yen, euro dollar, a quick update on that. Look, 110.50 was the bottom line that we wanted to really focus on, and we're trading there still. Okay, you probed below it just by a couple of pips on the euro, but we're broadly still there. The 100-day moving average in blue here also holding the lows. Lower median line parallel. You've got some stacked up support here. A downside break, you're basically looking at the Sunday stretch low. the 786 retracement. This median line that we talked about yesterday off of the highs, I think from last July, if I'm not mistaken, last December, excuse me. And that coincides here as well. And this is going to be sort of the near-term bearish invalidation is going to be a push below this. Break below 109.50 puts the broader resumption back into play. Okay, remember, this is where we opened the month, guys, right here. The monthly open was 109.78. Okay, so just above that. Topside resistance, you're looking at the upper median line parallel. You're looking at the initial reversal close that we made back here in December, and that takes you into 112.36 or so. Here's what the near-term chart looks like on the euro. So it's been a snoozer sesh all last night. Not surprising ahead of these major data prints, especially with the sapping of liquidity here. It's been a lackluster night. There was no update last night, guys. Again, I'm not really active on scalping these types of time frames, so keep that in mind. But the euro dollar, again, there's that median line support. Also, a basic slope line mimicking that same slope extended off the low here. Use that as a reference too, and that's basically just above the 110 figure. Okay, just to give you a broader picture of what the euro looks like here on the whole. All right. Notice one interesting thing as well, guys. These slopes are identical. So the slopes off the highs that we made for May, the slopes off the high that we made for June, identical slope. That break was clear-cut breakout position. And we'll look again. This is going to be what we need to clear to get back on the long side for the euro. All right. So we got less than 3 minutes to go. I see some question here. Raj saying Sterling Oz. I'm short divergence in the 5 minute. Looks good. Sterling Oz. Sure. Divergent. Okay, the trigger break on this one is long past. So I wouldn't necessarily use this as a trigger anymore. That trigger gave out and was tested as resistance. Basically, you're looking at that from 6 o'clock this morning. So that trigger is not justified anymore. On the way down here, this pair should have a limited response to the NFP print. But I would be tack on this retracement and look for support right around that 204.65. Key support 204.45 on your downside targets, okay? As far as the invalidation for this trade that you're in, basically a break above this median line structure right here would probably take me out of any short exposure. All right. Strong print for Kiwi dollar. Short thoughts. Andrew, let's take a quick look at the Kiwi. Again, we just have a couple of minutes left. Yeah, listen, I'm not going to touch the Kiwi for a couple of different reasons. That thing is flirting with a major disastrous break, and I wouldn't try to fade it even on a... I guess, let me go take it back. You're talking about a strong print. The only problem I would have on that, Andrew, is I have no clue where you would put your stop on this. Maybe against the overnight highs, but it's going to be a tough play. Okay, if this thing breaks below the median line, your first target is 65.90, but then you're looking all the way down here at 64. So keep that in view. All right, guys, less than a minute to go. We'll bring up the 5 minute charts here. We'll watch how that reacts. Okay. And 40 seconds out. Again, we're looking for 233 on the change in non-farm payrolls. Manufacturing is supposed to come in at 6,000. Private at 225,000. This is going to be the major read we want to see increase. Unemployment, like I said, expected to downtick. And labor force participation, we want to see if that upticks to 63 or holds at 62.9. If this contracts, that's not a good sign from the Fed. All right, 20 seconds out, guys. All right, and survey says non-farm payrolls for the month of June come in at 223, slightly weaker than expected. Did see a downtick, 5.3% in the unemployment rate. As far as the labor force participation, spilled to 62.6. Guys, that's not a good thing. That's going to be dollar negative. Remember, that 5.3% is directly going to be correlated with this contraction in the labor force. This takes us now in labor force participation beyond a 30-year low. I'm sorry, I corrected, 50-year low, 1970 and change. I'm not sure what year exactly was the last time we saw 62.8. Now labor force participation drops to 62.6. So on that, expectation for possibly some dollar weakness here. Dollar yen with a nice reversal off the high. So Raj, that still looks good on the swing side of things. Dollar CAD pulling back as well. Aussie dollar rocketing off the lows. Kiwi dollar, you want to take a look at this, Andrew, as far as the Kiwi fade is concerned. Still wouldn't be too concerned on, or still wouldn't be too interested in trying to play the long side there per se. So we'll let this pan out. Look for the pullbacks, and again, let's jump into the 30-minute charts and see where our levels are in some of these major trades. So dollar CAD on the 30-minute, your key support in your term is going to be right here. Remember, that's going to be the 2014 high day close at 125.60 near-term support. So that's going to be the break that would validate a little bit of a reversal trade here in dollar CAD. Looking at the euro dollar, which is going to be in focus. Not expecting too much here. Again, you have that major event risk with the Greek referendum over the weekend, but still broadly looking for defense of our long side bias while above 110.50. You can see we dribbled below that last night. Clear-cut support in European trade. Here's the break to the upside. And again, near-term targets 111.15. More importantly, 111.50. And then you'd be looking for that median line off the lows to give us some resistance. Looking at the Aussie dollar, which also showed a strong reaction to the upside here. One thing I want to say about the Aussie, if you're going to fade one of the calm currencies, Aussie and CAD would probably be my favorite ones away from the Kiwi, because just where the Kiwi is, it's so deep in a break here. I don't really want to try to play the long side of that, but I'll bring your attention to the Aussie dollar daily chart and the fact that, yet again, here we are testing 75.90. 75.90 is the low day close for 2015. So just as dollar CAD is trying to make a break back below, Aussie dollars continue to defend this level with precision since that April 2nd low. So that's going to be your risk to the downside here for the Aussie. While above this region, you're still looking for more evidence that this thing is going to give us a support bounce. Tough call to make because you're stacked up on resistance up into 76.70, but nonetheless, be mindful of that key support on the Aussie dollar. Going to the British pound, we didn't look at that earlier. Here's what the daily looks here. We talked about this level yesterday, 155.59. That's the 50% retracement from the advance off of the lows. You also had the median line parallel, which is in there right now. And a basic trendline support off the lows gives you another target down here at 54.70. Almost 100 pips away, but initial support, and to keep that topside play, the broader topside focus in play, here's that little support bounce off of that region. Okay, so I'm just going to monitor some of the headlines here that are crossing. It's going to be interesting to see people's take. A lot of the discussion has been, if data starts to slow down even a little, and what's going on with Europe and what's going on with Greece and the broader risk that poses to the region, will the Fed be able to move forward? Okay, and the fact that we're seeing the employment gauge sort of slide. Again, this is not what the focus should be, guys. And I'm sure you might hear people say on the headlines, yeah, NFP missed. That's true. But the biggest takeaway, in my humble opinion, you saw a downward revision for the previous month from 280,000 to 254. So that blowout read we got last month, that's been downwardly revised. Obviously, this month missed, but more importantly, this is going to be huge. And let me just show you guys real quick what labor force participation looks like. You see that 62.6? Here's the last time we saw 62.6. You got to keep going. You got to keep going. You got to keep going. Okay? Last time you saw that was right here in 1978. It's the last time labor force participation was this low. And you can see, obviously, since the crisis in 2007, labor force participation has been a major concern for the Fed, okay? And again, as this number decreases, it puts artificial downward pressure on the unemployment number. So that drop from 5.6 to 5.3, that's not something that should be a surprise, as we noted right ahead of the release. If labor force participation contracts, you're likely to see unemployment drop larger than expected, and that's exactly what we got here at 5.3%. So, again, I don't want to get it too aggressive here ahead of the weekend and the event risk that poses from Europe, but broadly speaking, this is not going to be a dollar positive trade. Raj saying, Mike, I'm thinking of holding the sterling Oz. I'm thinking of holding this for a long until 2000. It's to pull back. Any thoughts, please? Sterling Oz. Let's take a look at the broader chart for you here. It seems like you have a pretty heavy position on that. Okay. Okay, so key levels 205.65. We talked about that yesterday. I'm actually liking a lot for this trade, Raj, if you hold below, specifically today's close, if you hold below 204.74. That's the high day close for the year. It is a multi-year high, okay? And even before we made it, you can see that the resistance level here, we hadn't closed above it. Today's close will be paramount. Momentum, also some divergence here. Both reference points above 70 slightly, so I wouldn't look too much into it, but it looks like you're getting a support trigger right now in the 30-minute that looks like it wants to give out, and that'd be further validation for your trade to be to hold its course here. Let me just see if this gives us a little bit more guidance. That looks a little better there as far as the median line structure is concerned. So watch that median line comes in right around 2040, 203.90, excuse me. Basically the Asia lows that you made last night, and then look for a drop into that 236 basic retracement. Last week's low also comes right below that region. We highlighted that yesterday, and that would be your little bit more of a longer term target there to the downside. So Raj, I'd be looking for that, man. As long as it holds below the high day close, I wouldn't be too concerned. If you close above that region, I mean, look at 205.65. I'm not sure where your entry is or how much you're willing to take on that as far as pain is concerned, but that's going to be the invalidation level near term. Okay. Eileen says, thanks for explaining this about the read and how to interpret it. It's really helpful. I appreciate that. Raj says, stops are break even, so might as well hold it. It's due pull back, hopefully to the two handle. Again, the two handle or just above 20022 is a region I'd be looking at for major support here. So just ahead of that target that you're looking at, Raj, that's what I'd be looking at. But I would caution you, man, because you're trying to call a high here. And I just want to always be mindful of that. You're essentially calling a high to the rally that's lasted for more than 3 months. So a correction of that magnitude is larger than any correction we've seen so far since the start of the rally. And I would just be mindful of, the way I'll look at things is one step at a time. Well, first target's 202.70. If we get into that region, I'll take something off, maybe bring your stops even closer, lock in some of those profits, and then look to see the extended breakdown into 202.20, or excuse me, 200.20. That would be a region of which I'd start to clean up a little bit more of that trade. But with your stops at break even, Raj, much more comfortable with you trying to hold that. Okay. Now, as we go into the U.S. Open at 8:30 or 9:30 rather, guys, cash market open, you're likely to see a little bit more volatility as more market players come in and react to the data. A lot of times, the initial move will get paired, and then closing into Europe, you'll see the extension follow through. So remember, U.S. markets are closed tomorrow. European markets will be open tomorrow. So there will be time for the broader global market to react to this data as we head into Asia Pac later tonight. Okay, Euro 111.14 looked like it tagged that. Again, nice little pivot in price. 50% retracement of the rally for the week. Nice hold at 40 in momentum. So even on the data print, defense of the 40 level here begs for a break above 60. And from a momentum standpoint, that would be a reversal in momentum. So we want to see that 60 break move with a break above 111.15 to keep the top side in focus here. As far as the dollar CAD is concerned, let's see if that started to pan out. There's that target that we just talked about, 225.60, the open or high day close for the year. Median line structure off the lows. That's going to be the break that you'll want to see as well. Same thing here. This spent a lot of time in overbought condition, which really keeps my focus on the upside for CAD. What we would need to see to start favoring a little bit more of a larger reversal in the trade. Remember, the daily chart is at resistance or just missed that resistance tag. Would be a break below that high day close, okay, and a momentum break sub 40. This thing has not broken 40 since the start of the week, and in fact, it's been exceptionally clear as far as keeping the topside focus in play. Excuse me. 40 hold, 60 break, 40 hold, 60 break, 70 break. We'll need to see that 40 give out with a move below 225.60 here on dollar CAD. Dollar yen, a quick update on that. It looks like that region of resistance held. We actually probed through it here, and in fact, I bet you if we add a sliding parallel to that, it's going to be right along the highs that you made from last week. Right on. All right. So nice little sliding parallel catching that. Again, on the near term for the dollar yen, honestly, guys, you're still looking for 122.38, 122.35. This is still a huge region. I know we've probed through it. And in fact, if you guys remember on Tuesday, we took a short, excuse me, I'm losing my voice, which we closed out at 122. So we're still playing this region, but this would be the first area of focus for the dollar yen decline. And there's a quick retracement, figure out some of those targets. Okay, 122.80, 122.60 would be areas of interest near term to close out short exposure off that. Again, if you didn't take any positions on this, guys, and of course I'm not because I'm here talking to you guys, but if you want to take, or if you've taken any positions, this is where I'd look to wrap things up. Stops should be a break even at this point. On a reversal trade, if you missed the entry, you'd be looking for a rally back into the session lows for Europe, and that's basically 123.29. Possible entry there against the highs may be a play. It's going to be a larger ATR than we're looking for, but we'll look for that into the U.S. Open of cash markets. On the daily, the dollar yen is still exceptionally clear. You know, as far as where the dollar, broadly speaking, is trading, it's been sort of confusing because there's been some moves in the Aussie and the Kiwi that have offset it. But as far as dollar yen is concerned, guys, we're still pretty clean. We're still pretty clean, okay? And there's that 122.36, 122.38 level, really paramount. And this is going to be key support for the dollar yen. Now, markets are on the fritz, and there is a lot of noise, both from Greece, both from what's happening on that front and the implication it has for the region, both on the data for the United States, which came in sort of mixed here today. So in the event, guys, and this is something you always need to plan for, in the event you see some sort of massive reversal on the dollar, keep your eye on this. So the dollar index, look where the high was. 11,937. We overshot it by 2 pips before plummeting lower. Okay, and the sort of signal for me to resume our favorite downtrend here in the dollar would be a break back below the same exact level we've been looking at since the start of the month, 11,880, 11,887. So break back below this would put resumption in my mind back into play. There's a basic trigger here on the daily I'll be watching. And remember, we rallied from oversold or sub 40 position early in the month right into 60, and that held. Okay, so we'll be looking for short triggers as that continues to be the case here, and as long as that technical factor remains, you have to let the possibility that the dollar is not done on the downside. Okay, and here's the broader implications, guys. If the employment picture starts to slow, then that puts the Fed in a really bad spot. Okay, because inflation remains the laggard. They're trying to stoke inflation. There are concerns abroad of deflationary pressures. They're all still on an inflationary outlook. They're trying to stoke inflation, as the Fed is. And now if the employment picture starts to lag, or you see a little bit of again, the contraction in the labor force here is the biggest thing for me. If you continue to see that, that's a big drop, okay? This typically moves by 0.1 or 0.2% on a big day. This is a 0.3% drop to a new, 50-year low almost. So if the employment picture starts to drag, well, those expectations for the Fed to start moving on interest rates in July or September, whatever the hell people are thinking, well, that goes right out the window. Okay, and part of the reason the dollar's been so strong to start off the year is that expectation that, you know what, the Fed's really going to need to start moving on rates sometime soon. So we'll see what kind of impact this has on the broader expectations. If you take a quick look at the Credit Suisse overnight swaps, I just want to see if that's changed at all. Again, these are what market participants are pricing in as far as interest rates from the major economies of the world. Okay, and you see a slight dent here, down 2.9 basis points. So the expectations over the next 12 months down slightly on the back of that read. We're still expecting 54 basis points in interest rate hikes from the Federal Reserve over the next 12 months. So that takes us into July of 2016. So keep that in view as just a broader region. But the next interest rate decision, this is starting to come off as well. There's only a 1.9% chance that we'll see the Fed move 25 basis points higher at next month's read. Okay, so we'll reference this again a couple of times throughout next week as we open up the month to see if there's any changes. But broadly speaking, Today's data, not all that supportive. A quick look at the equity markets. You still have the FTSE 100 at the session highs up 0.38%. CAC pretty much unchanged on the session. That's been a slow mover. The DAX, same thing. We've been hobbling in and out of positive territory throughout the course of the session. U.S. equity futures ahead of the U.S. Open, looking higher, but not by much. Off session highs here. Dow up 47 points. S&P up almost 6 handles, and NASDAQ up by 14 points. Relative performance against the dollar now, if we update this, you can see that all those losses have started to be impaired. So the dollar coming off. Euro pushing into a fresh high, 0.28% up on the session today. Remember, we were almost flat to open up the webinar. Here's what it looks like on the Euro 30-minute. Again, this might be an opportunity to get back on the long as this thing pulls back. So this is the retracement that we looked at in the 30-minute chart. There's your Tokyo, Sydney highs in this region right here that we're trading. And I just want to see, guys, bear with me one moment, if this yields anything. It's super short term, but okay, I'm just going to leave that there for reference. For now. And if we make it back above here on the open of U.S. cash markets, if we make it back above here, that's going to be what I'm going to like to favor as the near-term bullish invalidation. Or bearish invalidation, excuse me. So we'll see if we can get back above that near term. Also, another one that tends to react to risk pretty well is Aussie Yen. I know that markets haven't necessarily turned over on the data yet. We'll have to see how this reacts as we open up U.S. trade. But one thing I did want to note on this is from the highs that we made last night. I was looking at this morning. I actually thought this was a compelling trigger right here. I didn't take it just on account of the data today, but off of the turn, off the highs here, right? You got some divergence in price action. Price made a higher high. The oscillator made a lower high. Okay, and as I tell you guys, 9 times out of 10, these are going to be your best plays. Okay, and not only that, ever since that high was made, 40 break, 40 break, 40 break, 40 break, and I was very interested to see if this holds 60, and it's exactly what we did. We spiked higher on the release, and here we are moving lower. So relatively, on the broader picture for Aussie Yen, I'm still looking to see if we make it below this median line structure off of the lows for the year. And the target would be 92.85 on the drop below that. So Aussie Yen, another one that's on the menu or on the radar, but not necessarily a good play yet here. Keo Kelly says, Sterling Yen and Aussie Kiwi, please. Sure. Sterling Yen looks like this. Here's the daily chart. I actually put a scalp on this on Daily FX and on SB Trade Desk. We put an update on this the other day. The major thing I'm looking for here is for a hold below 92.40, and that's going to open up that major key support target we talked about earlier at 189.70 into 190.50. I know it's a larger range, but a very healthy ATR on Sterling Yen. And I'm not really willing to do anything while we're in this region. Keep in mind a couple of things. The Sterling's rallying today, or at least coming off the lows, and so is the Yen. So to see chop sideways action like that shouldn't be too surprising. Here's what the 30-minute looks like from the scalp report. We've still been holding within this formation with freakishly clean precision, right, on the touches here, which keeps the downside focus in play while below this region. Basically 93.50 into 93.60. And a break of the support and the weekly opening range low. Like I said, we target that 109 or 190.80 region, 190.85. Keo, any questions on Sterling Yen beyond this? Let me bring up a 5-minute chart and see if there's anything going on there. Yeah, so this could be the confirmation of the turn. So even on the 5, you've been holding 40, 60 break, 40 hold, 60 break. There's the 40 break. Near term, you want to stay bearish below that trend line there in momentum. And you're checking the 618 retracement right now, so I'd be watching that as near-term support. Actually, the 786 caught that low too. Nope. Nope. That might be the play right there. All of this stuff stacks up right here. Do you see this? This is exactly what you look for, guys. You want these confluence regions. So in fact, you're at support. This thing could see a bounce. You look for support near the swing lows that you made here for the initial European Open. Possible short against the New York high, but you need to see a break below this region to really continue favoring the downside in sterling yen. And again, the 5-minute chart, we've been waiting for a drop into this region. So we'll see if we can get a re-entry here. But so far, again, guys, don't go chasing anything today. Not your day to do that, because on the U.S. cash market open, a lot of times these things reverse and give you a better entry back higher. So Keo, let me know if you have any other questions here on sterling yen. I hope that offers some clarity for you on the near term, brother. And we'll see if that near-term support holds. I would expect to see a little bit of a rebound there, but that's really the level you got to beat for this short exposure. Tuttle, great to see you, sir. Oh, before I move on, Tuttle, one sec, my man. Keo also wants to look at Aussie Kiwi. Aussie Kiwi, a monstrosity of a trade. This thing finally, ooh, beautiful tag. Okay, so we actually did get a tag of 114.20. We were talking about this yesterday. It fizzled right ahead of it. And then the median line off the low caught a support. Okay. And it was acting as resistance earlier today, trying to get through this. Here's the stretch, went into 114.20. That completes an exact 100% extension off the low, 2 equal legs up. You need to see it break back below 113, 112.78 to look for a target down here. Initially at the monthly pivot, 111.58, and then right down at 110.98 would be a better level of key support and the median line parallel. Divergence into the highs, trigger break. Again, this is the daily, but that's sort of what I would need to see to confirm a near-term reversal here in Aussie Key. Apologies, I'm new. Hey, no apologies, Keo. I just want to make sure that we're on the same page. So let me know if you have any questions, man. You did nothing wrong, my man. You're in the right place. He says, thank you. Hey, you're more than welcome. So for Aussie Key, that major key resistance was huge. I'll bring your attention again just to the lows that you made in May. Okay, tagged again in June. Extrapolated to the high from May to the pip. So really nice structure here. Again, you're fighting an uptrend, so I wouldn't be looking to short this unless we get a little bit more confirmation on a broader trade here. If you're looking for the intraday scalp, let's look at what Aussie Kiwi looks like on that front. Oh, I have the trade right here. Aussie Kiwi, 30 minutes. Okay, and this is actually a very strong divergent signal, guys. This is the ideal signal here. One above 40, or one above the extreme, one below. You got a real nice move. Higher high, lower high, fading momentum. And off the low in price for the week, that would be your trigger break. Now, I would only do something on this trigger break if we do clear below 113 again. 113 region's pretty big. You can saw that break. We rebounded ahead of it, 113.20. We take a quick retracement off the weekly range. Might offer some clarity on that as well. 38.2 comes right there. So either way you look at it, you know the level that we need to be. All right, Keo. Hope that helps, man. Tuttle says, "Good morning, Michael. Your biases, long invalidation, short invalidation, neutral, for the pairs you are focused on, are they strict conditions for your entries?" I'm not sure how to respond to that, Tuttle. No. Guys, I want to say a couple of different things real quick, just to recap the strategy. As far as bullish and bearish invalidation, those aren't necessarily triggers. Those are what are invalidating or validating our bias. It doesn't mean that's what triggers the trade, right, Tuttle? So if I say that, for example, 113.14, 113.20, this is going to be bullish invalidation, it means if the market breaks below this, I am looking lower. That's not necessarily the trigger, right? We would still look for a trigger momentum. We'd still look for an opening range break. We'd look for a snapback to get back into that region and try to short against some high. That's just to validate bias strictly. That's it. Not necessarily entries, Tuttle. Does that make sense? I just want to make sure we're on the same page there. Even after one side gets invalidated or validated, you still need to wait for the pullback. You still need to wait for the triggered momentum. You still need to wait for something to actually trigger the price. Tuttle says, I meant if price breaks a bullish invalidation level, are you not making any long trades? No, that's not necessarily true either, Tuttle. I'm looking lower, but if that bullish invalidation break drops into a key support zone, and there's a long trigger that comes into play, there's no reason not to take that. We're intraday trading, right, Tuttle? So, guys, even if I'm saying, I want to make sure we're all on the same page with this. This is a great question, Tuttle. I'm sure other people in the room have it. Even if our bias is long and the bullish invalidation level is down here, right? I'll still take a short if we're at resistance and the market's giving me a proper trigger. No problem with that. It's just more important that I keep you guys on the broader trend, right? So we know the near-term trend, the near-term focus is higher. On a scalp basis, I got no problem taking small positions against that, right? But we need to maintain. I'd rather be buying on the pullback if that's the case. He says, right, should be treated more as evidence rather than a filter. Right, Tuttle, right. And I think you got this down pat. But great question. A lot of people probably are thinking the same thing. So, Tuttle, you're welcome, my man. You're more than welcome, and thanks for asking that. Raj says, Mike, your thoughts on dollar CAD, please. Where to take off profits, or does this thing looking to turn for a long as well as it has turned from major resistance? Right, so dollar CAD. We talked about this earlier. Yeah, the major resistance from a near-term scalping standpoint, I'd be looking to play against that major key level, which was, again, 126.37. We just missed it on this stretch here. Let me bring this to the 30 and see those levels again. So one thing I want to say is this. Whose question was that, Raj? Raj, we can't make any assumptions, my man, that this thing is reversed or there's a huge reversal in trend just off of a pullback 20 pips or 30 pips off the high. That kind of thinking is going to get you in trouble more often than not, Raj, right? So if you're talking about a near-term position that you're in off the highs here, great. Like I said, 125.60 is where I would take a small portion off if you're trading multiple lot sizes, and I'd bring my stops to break even, and I'd leave a little on. If you get that push through 25.60, you're likely to see this thing drop right in to the 25 handle. If that holds into U.S. trade on the open and we blast through the highs, this thing is going to go right into 27. So my question to you, Raj, is if you're scalping, we need to keep it a scalp. If we're swing trading, we need to keep it a swing trade. If we're position trading, it needs to be kept a position, right? So don't get into a swing entry or a scalp entry and then say, oh, okay, it looks like a great position. I'm going to try to see if I can get a move into 123. Well, you don't have any validation that that's going to necessarily be the play yet. And if we're looking at near-term price action, we need to take it one step at a time. So support at 125.60. If that breaks, I'd definitely leave something on to see if we can get through this on the U.S. Open, but I'd be looking for a drop into 25 subsequent to that. Raj, does that make sense, man? Eileen says, yes, Tuttle, needed to hear that too. Thanks for the question. You're getting a lot of fans in here, Tuttle. Raj, I appreciate that. You're more than welcome. Kyle says, Mike, I missed your comments on Aussie Yen. If you have a minute, please review. Kyle, I'll have this archived for you. I'll look at it real quick just to give you a quick review, but we did go over it at length. So here's the Aussie Yen again. Guys, excuse me, just one moment to get this through for Alan, or for Kyle rather. Excuse me. So we're at the 100-day moving average. The thing we talked about is the turn off this. This is objectively the June opening range. We gapped below it. We filled the gap, and we're holding below 94.52, which is not only a basic 38.2, but it's the June opening range low, and also pretty damn close to those March highs. Those come in just higher at 94.65. So near term on the Aussie Yen, here's what we're looking at from the start of the week. Again, not a trade I've been following, but here's the weekly open. All right, and what we're talking about is the momentum signature. So since the start of the week, since that low that we gapped into, you can see that we held 40, 60 break, held 40, 60 test and hold, 40 break, shifts the momentum signature bias to the downside. But what I was saying is the Aussie's rallying, at least off the lows, and the yen is rallying. So I don't really have a strong directional bias on that. Here's Aussie Dollar, right, on the daily. Key support, we talked about this earlier. I don't want to be short Aussie Yen, not necessarily because Aussie Dollar is on key support, but the dollar is showing a pretty strong turnaround as well, right? We're already, we're already 35 pips off the high, 30 pips off the high. Those are index pips, which is much larger. It's half of the daily ATR we just made on the back of that print. So that's my problem with Aussie Yen. I think, yen gains will probably outpace Aussie gains. So, the broader directional bias, I would have to say, is probably still weighted to the downside. But near term, you also have that trend line support or median line parallel support to contend with. And that's, not too far off from where you are, about 30 pips lower. So I don't really have a strong bias on Aussie Yen, Kyle, to take an intraday trade on it. But those are the levels I'd be looking at. Hope that helps, man. Alan says, just have to say, Mike, before SB, I hadn't ever drawn trend lines in RSI. I also hadn't gone back in time to define trends and stuck to lower time frame charts. 2 weeks into SB, and my entries are 100 times more accurate. Alan, I always appreciate the feedback, man. Again, give yourself the credit, my man. You're the one who's taking the trades. I'm only showing you guys the levels. So well done on that, Alan. And again, with this type of strategy, on the near term, it's all about the entries, right? Because our stops are going to be always based on a technical merit, and it's going to be how close we can get those those entries rather, to make that risk reward in our favor. So, Alan, more props to you, and again, I always appreciate the feedback. Eileen says, by the way, your sound still goes good, bad cycles, like it gets squeezed, then okay. Hear it on the SB archive recording too. Many other streaming and equipment working okay elsewhere. Okay, Eileen, thanks for letting me know. I know you guys were having a problem with Jamie's webinar yesterday. I heard the same thing. So keep me updated on that. It doesn't seem to be a hardware issue. I think it's an internet issue for our office here in New York. So do keep me updated on that, guys. Title says, Michael, on the euro dollar 5-minute price retraced back to the Tokyo and London session highs. Right? Roughly, and 50% retracement of the morning range. There was a messy RSI trigger, break, and retest. What do you think about that as a long entry? I think you're talking about this. Is this the RSI break and retest that you're looking at? A bit higher. Yeah. Probably looking at this. Messy retest. Yeah, I hear you. Wouldn't necessarily be working off of the RSI signature on this merit. I do like the long side of the euro dollar in general. So on this trade here, it's tough to justify a stop against that swing low, man. That would need to be that is where it would need to be. Jeez, I couldn't get that sentence out. Does that make sense, Tuttle? So, I mean, if you're comfortable taking that from a momentum standpoint, I don't think we've seen enough yet. Remember, the initial reaction, it still looks good. It still looks good. Again, keep your eyes on the major key levels that we've been looking at, right? And on the daily chart, I think this is much more telling. with that 1050 level, right? We were looking for this level to hold. On a break below this, this was going to be the target. A drop for 100 pips lower. The fact that we're pushing through this again looks pretty good. The target should be the upper median line parallel. Again, this is not a scalp, guys. This is guidance on the daily chart of what we should be expecting. 30-minute chart is what's going to tell us what's going on. You haven't gotten the 60 break here yet. Okay, he says I was asking more for your opinion on the entry right now. Yeah, for me it's not just there for me yet, Tuttle, to be quite frank with you. Also, was the morning retrace something you would have used? When you say morning retrace, are you talking about this rally, or are you talking about literally this rally? This one right here, Tuttle? From the Tokyo low. Okay. Yeah, I would, absolutely. But I would tell you what I would use this for. I would use this retracement for the pullback off of this. That's it. That's the only only thing I would gauge this retracement for is the pullback off of the high. And if you can see that pullback off the high actually came exactly into the 50% retracement. So yes, absolutely, Tuttle. That is what you want to look for. I wouldn't be stressing necessarily this anymore. Let me clean this up for you a little bit, guys. Yeah. So any long exposure that you take, any triggers that come out into the U.S. Open in just under 23 minutes, you'd look for a couple of things. You'd look for that 50% retracement to maintain and hold. That's the actual Sydney high, which is interesting here. And basically a break below 110.66. Remember, the daily chart, 110.50 is so radically important right now. I would love to have my stop against this. You know what I mean, Tuttle? That's my biggest thing on this. But yeah, if you break back below 110.75 on the intraday chart, I probably wouldn't want to be holding any long exposure at that point. Good question. The euro is going to be the hardest to trade, Tuttle. Just for a side note here, man, because of the whole thing with Greece over the weekend. There's not always think of things, guys, from a psychological standpoint, and that's what we're doing. Technical analysis, in and of itself, is a study of crowd and group psychology, right? That's what we're studying here. The sentiment on the trade, essentially, is what you're looking at when you're looking at the chart. So my point to you is that there's going to be a very high reluctancy for anyone to want to take aggressive long exposure on the euro ahead of the weekend. What you're seeing here, and if we continue to travel higher, is probably a washout of all the shorts that use the rally to get back on the short side of the trade, right? But I don't think there's going to be too much excessive new long euro exposure taken, obviously ahead of that weekend event risk. Does that make sense, Tuttle? So if you're trying to trade the dollar story today, the euro is probably going to be the trickiest one to get involved with. Dollar CAD looks good. We look at dollar yen. I want to see what dollar yen's doing. Nice. Nice. 123. Ooh. Those levels in play. Okay, so that's the 38.2 retracement. It's also going to be a stretch high here. I don't expect this will be the low. So you got a 40 bounce in momentum. Even if this thing travels back up into 60, look for 60 resistance in momentum. And on price, you'd be looking for those European lows. And Asia lows, actually. 123.30 is resistance. But yeah, looking lower into 122.80, 122.60, and again, key support. So I hope that helps, Tuttle. This is very helpful. Thank you, Michael. Hey, more than welcome, man. Always great comments, Tuttle. Always welcome. All right, so let's see how we start the U.S. session here in just under 20 minutes. Obviously, guys, feel free to throw any last-minute questions that you have. Would you consider having sessions that focus entirely on non-setup questions? Tuttle, for sure. My schedule is sort of jam-packed, and I'm always more than willing to answer questions here in the webinar. So any questions you guys have, feel free to throw them out here, guys, because there's probably someone who has a very similar question. But Tuttle, we'll look into doing some more training exclusive webinars once we get everything flushed out. By the way, IDO is on the horizon here, guys. Finally, we had a conference call with them yesterday, and that looks to be launched within the next couple of weeks here. I'll keep you guys updated. I've been working with them to try to get you guys free access for everyone who has SB membership now. I'm trying to get it so that all of you have free access to the IDO terminal or the IDO search engine, and then obviously any newcomers that are coming to SB will have to pay for that upgrade to get the premium. But don't take my word for it yet. I might be speaking too soon, but I will keep you guys updated. That's the goal, is for me to at least grandfather in the current SB users. So I'll keep that in mind, or keep that in mind as we move forward. Tuttle says, have you been using it? It's something I take a look at, Tuttle, for sure. I haven't implemented it, and from an intraday trading standpoint, it won't be the biggest um, impact for our trading, but certainly for swing trades, certainly on the more medium term approach, it can give you some really interesting data. Again, it's not going to be a signal service, guys. It's not going to tell you buy here and sell here, but it'll be able to point out and pinpoint when we've seen these recurring patterns in the past. And of those past recurring patterns, this is the percentage winners, this is the percentage losers, this is the percentage average gain, and here's the percentage average loss. And from your standpoint, it's basically doing all the seasonality work for you, right? So you take a step back and say, hey, well, last time we saw this pattern in euro dollar, there was a compelling, 60% of those patterns saw, a gain of 40 x amount of pips on average. And so that will give you a much more conviction on the trade. So it might not necessarily prompt new trade ideas, Tuttle, but what it'll do is it'll allow us to have either more conviction on that to press the trade harder, or I see a signal here, I see a trigger here. Oh man, the last time we saw this thing tumbled 4%. It's probably not the best idea for me to try to fade it. So not only will it tell us how much conviction we have on the trade, but more importantly, Tuttle, it can stop us from taking positions that the near term might look like the trigger's there, but if we look historically, it's not really, hasn't really paid out. So that's the thing with all indicators, guys, and all triggers. It's not just when to take the trade, but it also tells us when we want to be out of the trade or when we might want to avoid that position. So we'll definitely be writing some material for it for you guys before launch, and we'll have some references that you guys can look at to get a better idea of how to use that thing effectively. But exciting stuff, and that should be on the horizon pretty soon. Tuttle says, sounds good. Thank you for the preview. More than welcome. Eileen says, very cool. Thanks for your negotiations. I'll do my best. Don't take my word for it yet. But that's the plan moving forward, at least from my end. So, guys, feel free to throw out any last-minute questions or trade setups. Again, U.S. markets will be offline tomorrow, so there's not going to be any updates from our end. We'll pick things back up on Sunday. Beware of the euro crosses heading into the weekend. I wouldn't say that the gap risk is extremely high, but certainly, it's there. Okay, it's there. I don't really think anyone's expecting the vote to really shatter markets, but with these things, guys, it's pointless to sit there and guess what you think is going to happen. It's just you got to be there when it happens and react to it accordingly. Thinking euro will go back to the same level as last Friday, says Mark. So if you get, that's the next target is 111.50. The close of last week was actually 111.57, so a bit higher. So definitely a possibility. We're still working under the premise that we're in this formation. This is major key support. This is going to be the breakout you need to get the broader turn in bias on the 30-minute chart. Excuse me, 1150. Yeah, basically it still needs to be that the Sunday gap or the covered gap, which we covered already, but that close, and then the 112 handle is basically for me what'll invalidate this short bias on the intraday type of play, and that for me would be a much more conviction long. But we are broadly looking to see if the euro can hold this major critical support on the daily chart. Mark, or Raj says, Mike, what do you and Jamie do all day? Once the webinar is over, do you get bored of watching charts? LOL. Raj, How you gonna say that? How you gonna ask me that, man? No, we never get bored of looking at charts. There's always opportunity somewhere, and even on time periods like this, where it's early in the month and I'm very, very light on my feet, not really active as much. This is the time where you really got to go through the charts and get your setups ready for the month. You know, the broader picture of what we're looking at. It always starts with the daily. It always starts with major key levels of importance on the daily, and then we'll drill down on the intraday. But trust me, Raj, it's not that easy to keep, all of these in view. Um, Raj says, do you guys have clients or do you trade for yourselves? Yeah, so we don't actively trade for clients yet. That might be something that an offer that SB service might be offering down the road, Raj. But right now we trade our own. We trade our own funds. A quick look on gold, because gold actually broke a major support level, which was 1163 ahead of the release, ahead of today's NFP print. You saw a tweet maybe from Jamie earlier today saying that this could get really ugly. I agree with him. Had we closed, or if we do close sub 1163, I mean, you're looking at the targets at that point that we mapped on the weekly standpoint. And I've showed you this chart many times here in the SB webinars, but here's what gold looks like on the weekly standpoint. Okay, and this is pretty critical support. Okay, if we clear 1137 on the downside, especially on a closed basis, there's really nothing on tap until 111. Might be a psychological figure, but I'd be looking for 110 or 1055, 1044. This region right here, and that's actually the 2010 stretch lows, pretty close to the highs that you made in 2008 on that initial stretch. But there's the 2010 stretch low, so pretty nice pivot in price. If this weekly candle holds here, and if price closes above this today, note one thing, guys. Momentum on the weekly chart, still in consolidation. So despite whatever you hear, the technicals haven't given us the breakout yet. Okay, that's still here. Price still holding support. On the daily basis, right? Coming from oversold, yeah, we found resistance had a 60, but here's a 40 bounce. And again, today, this thing was below 40. Now it's back above. You have to wait for the close, but today would be a second defense if it holds. Don't want to ignore those things. Definitely don't want to ignore those things. So, keep that in mind. Again, it's too early to call any type of rebound on this, but if we close sub 40 and if this thing closes, well, I guess if we close sub 40, momentum is a major stress here. As far as support's concerned on price, you still have that room on the weekly chart before you start to validate, or excuse me, or invalidate, or validate rather, a larger break in momentum in price rather, and that would be the 1137 level. But there is stacked up at 1155, 1151, right over here. Any questions on that? Yeah, Tuttle, I've actually tried to do that, my man. I do apologize. Michael, Tuttle's asking, Michael, is it possible to turn off the Gotowebinar emails? It's something from their end, guys. I've spoken with them. I know after each email, you guys probably get that thanks for attending. There's nothing I can do on that front, Tuttle. Sorry. Leon says, suggestion: would like to see Jamie do a quarterly webinar about longer term opportunities, what he likes for the upcoming quarter, more big picture stuff. Um, Tuttle says, no problem. Sorry about that. Leon, I'll let him know. I'll definitely always, any feedback you guys have, feel free. Always feel free to email either myself or Jamie M. Boutros at sbtradedesk.com or jsetley at sbtradedesk.com. If you want to be a little bit more generic, you can shoot an email to info at sbtradedesk.com. But your comments, suggestions, feedback, always welcome, guys. Commodities, any view on the wholesale tea price? Happy 4th of July holiday from the UK. GS, I appreciate that. Don't really follow tea prices at all, so I don't even have any charts on that per se, GS, but gold has been the focus. We might as well go over some of the other commodities real quick. Here's what silver looks like. That slid behind the 786 retracement, which was not only that last swing low from April, but it was also the initial opening range low for the month. So that now coincides with the basic trendline resistance off the high, and this is going to be the focus that you need to invalidate or validate, a reversal near term in silver. all the commodities have been struggling to hold the 40 momentum and look like they want to make some sort of rebound, and that coincides pretty well with the dollar pullback. So we'll see if this materializes here, but that is the focus for me. A little bit larger reversal here in palladium, back above the initial yearly lows here. You'll want to see this close above that low for the reversal, and that's basically exactly at 700. Nice confluence there at 720, 719. So we'll see. We haven't gotten the confirmation or conviction that we have reversed on all these commodities, but certainly looks like they're trying. Mike, is sentiment something we should pay attention to in swing or scalping, or is that more of a long-term trading thing? Alan, it depends what you mean by that. That's a pretty broad question, man. Sentiment changes day to day, and the broader sentiment changes can be on longer-term trades like you're looking at, or even longer. So it really depends what you're looking to do, Alan. The style of trading you're looking at should dictate what kind of things you're taking into account when taking a trade. So, for example, if I'm intraday trading, I'm not stressing the economic data prints by any means. I do pay attention to them. I do follow them. I do talk about them here in the webinar, but that's because we're trying to paint a picture for the broader bias, right? But if I'm intraday trading per se, there's a data print next Tuesday that's going to entail a major decision on whether a Fed is going or a central bank is going to ease or not. Yeah, that doesn't have anything to do with me right now. I'm trading intraday right now, right, Alan? Um, the only thing I'll say is this. It's important for you to pay attention to sentiment. Why? Because the broader trend is going to be based on that. And Alan, we should never be trading just on the intraday charts. As you heard earlier, um, who was that with those really kind words earlier in the morning? Was it Kyle? Alan, with regards to keeping his focus way too on the near-term charts and missing the larger pictures. It's important for us um, to keep in mind that we should always have a broader bias. Yeah, Alan, I got you, man. We should always have a broader bias. If you're trading just intraday, guys, and you don't have a broader idea of what the picture is doing on a larger scale in the daily chart, you're trading in the blind. I equate it to trying to throw darts with the lights off, right? I generally know that the dart direction is over there, so I'm just going to throw it, but you don't have no clue where on that wall the dartboard is, right? So we need to have a broader picture of what's going on with the broader trade. And then intraday, now I know, okay, we're in a strong uptrend, but I'm looking at this major key resistance. Let me look at the scalp. Maybe there's a short against that. Inevitably, I'm looking to buy that because I'm bullish, but maybe near term, there might be a play off that high. So does that make sense? I hope that offers some clarity on that, Alan. He says, yeah, that was me. Okay. To be more specific, I should have asked about SSI. SSI, that's, Alan, it's not something I take into account. It could be very helpful in definitely trying to ascertain what the retail market is doing. And certainly when I'm in a position or if I'm looking to confirm a bias, I'll look at the SSI just to get an idea of, or just to confirm that I'm not in the same lot as the broader retail crowd, right? If I'm super bullish euro, guys, and SSI is running, +3, that's not a trade I'm going to have excessive conviction on, right? Now, if I'm super bullish the Kiwi and I start to see, or any trade, and I start to see SSI coming off of short exposure, right? Then it's the switches in SSI, Alan, that I'll pay attention to a flip from net negative to net positive or a larger variation swing. But on a day-to-day basis, I don't really pay attention to SSI too much. My personal trading strategy. All right. All right, guys. So we'll wrap it up there for the week. We'll pick things up again back again on Monday. On Sunday, we'll have the swing updates and the intraday updates for you in the afternoon. Again, on Monday morning, we'll have the webinar on Daily FX. It's going to be the public webinar. All of you guys have access to that. And then back here on SB Tuesday, Wednesday, and Thursday. For those of you stateside, I wish you a happy, safe, blessed holiday. Enjoy the 3-day weekend. Thanks for that title. Mark says, enjoy the 4th, JNM. Alan, I appreciate your comments as always. Eileen says, I look forward to listen to this class again. Glad for the extra questions. Michael, have a great 4th of July. No skiing, but maybe something to take your eyes off from the chart. No worries on that, Eileen. I've got something to take my eyes off the chart. No problem. Guys, have a great holiday. I will see you all on Monday on Daily FX and then back here on Tuesday morning. Cheers.